Welcome to Barchart's series of webinars designed to educate you about a variety of market concepts, inform you about the features and tools Barchart provides related to these concepts, and finally to give you some insider's knowledge to help you make a more informed investment decision. Today's subject, swing trading your way to profitability. In other words, swing trading. So somewhere between day trading and long-term investing lies swing trading. Now, this style of trading kind of looks to capture a small piece of a price movement or a trend over a relatively short period of time. Usually more than one day, but usually not more greater than, let's say, 2 weeks. Swing traders tend to rely a little bit more on technical analysis than fundamentals and try to time their entries and exits on a multiple time frame analysis. We'll look at that in order to help them reduce their risk and also help them set realistic and timely reward targets. Hello, everyone. My name is John Rowland, Barchart's head of trading education. And, I thought today what we do is we talk about how I swing trade and what features Barchart has to help me pick my swing candidates. But before we get to there, please welcome my partner and our moderator, Barchart's project director, Jean Baker. Hello, Jean.
Good afternoon, John. How are you doing?
I'm doing just fine. Are you excited for today?
It's the beginning of a new month, yes, and
It's
lots of great things that you're going to cover today.
I'm thinking that now we're into March, we're getting into spring and some warmer weather, so I'm kind of excited for that.
Well, we hope. Yep.
We never know, right?
That's right.
What's that? In like a lion, out like a lamb, or something like that. But it seems like it's coming in. March is coming in like a lamb. So I don't know. We'll see what happens. Okay, you ready to get started then?
Yes, let's get going.
Okay, cool. All right, so just a reminder that today's session is for educational purposes only, and decisions to buy, sell, hold, or trade in securities, commodities, or other investments involves risk and are best made on the advice of a qualified professional. Now, before undertaking any trading program, you should consult a qualified financial professional, and under no circumstances shall we be liable for any loss or damages you or anyone else incurs as a result of any trading activity or investment activity that you or anyone else engages in based on information or material that you receive through barchart.com or our services. Okay, so what exactly is swing trading? So as I said in my introduction, we're going to hold positions for relatively short periods of time. Again, somewhere between a couple days to maybe as much as a couple weeks. We're going to try to capture a small portion of a price movement. Now, trend is our friend, so we'll probably be looking at trend type trades. But momentum is also a big part of our swing trading style. So we'll talk about that. And finally, the aspect of technical analysis. Discovery of the markets with these price momentums, but also we're going to use technical analysis to help us define our risk and help us time better entries and exits. Okay, so what I would like to do here is, let's go back to Barchart. And what I need to do is I gotta kind of before we break down a couple swing trades, I want to do a little groundwork and show you some of the tools Barchart has that I use in my process. So first of all, let's go to, here's just a stock, any stock, and this is Mosaic, and this is one of the ones that's been kind of popular or moving in recent. And it doesn't matter if I'm in a stock or an ETF or a futures market or a currency, you'll find in the upper right-hand corner something called Barchart's technical opinion. Now, what this is, it gives us a quick synopsis of the current condition of technical analysis, short-term, and intermediate, and long-term. And it also can alert us of potential overbought or oversold territory market conditions. And that's over here. So what I'm going to do is we're going to open this up. And once I open this up, we'll discover that there's a lot more in-depth detail of this page. But let me kind of help you break down this page, because this is really going to be an important tool for us as we start using it for selecting momentum type candidates. So the first thing is we have what is called an overall average. And notice, and for this particular stock, it is 100%. And the overall signal, average signal, is really a composite of 13 indicators. And those 13 indicators are right down here. And you can see that they move from short-term indicators to medium-term to long-term indicators. So it says 100%, which means that of those 13 indicators, all their opinions are of a buy opinion. Now, when we say opinion here, what we're really doing is saying is that the common interpretation of that individual indicator is giving either a buy or a sell signal. So for instance, if I go to the 20-day moving average and I open up a chart, it is a buy signal. There it is right there. Once we have a close above the 20-day moving average, the common interpretation is that is a buy signal. And as long as price stays above or closes above the 20-day moving average, then that will continue to be a buy signal. If price closes below the 20-day moving average, then that would generate a sell signal, or in other words, a sell opinion. The other part of this page is it breaks down each one of the different indicators in terms of a signal strength, which is over a longer period, historical period, and a signal direction, which is over a shorter period. Now, if I go into the help section, and there's a little bit more detail about how the page is put together, but if I scroll down here just a little bit, we can see that the overall strength, right, goes from maximum to minimum, and our signal direction goes from weakest to strongest, or strongest to weakest. So when we look at the signal direction, this is giving us more information over a longer period of time. And for the signal direction, the signal strength, it's for equities, it's over a 200-day period, as you can see up here. And for futures, it's 100 days. If I'm looking at the direction, notice that it's over only a 3-day period, right? A shorter momentum indicator for us. So we have two tools here. We have one that's kind of giving us the big picture over a longer period of time. And then we have another one that's kind of showing us a snapshot of what's going on in the last 3 days. Momentum. And that's really important for us as swing traders, because we want to be on the right side of our trend. Now, one of the things that I like about this description is, and just look at this paragraph here, it says that when we look at how we rate these signals, we're talking about, in this case, it says it compares the current diversions of the signal against the diversion of the nearest 3 trading sessions. And this is for the direction one, right? And so as the diversion gets greater, that is a strengthening of our trend. Whereas if the divergence is decreasing, that could signify a weakening trend. So what does that really mean? So again, let's go back to our, first before that, let me turn this on, get rid of that. So here's my 20-day moving average again. And you can see that our strength, our longer time frame, is at the maximum. And that's telling us that over the last 200 days, this 20-day moving average is very, very strong. And what is the momentum? Well, it's strengthening. In other words, over the last 3 days, we should see price movement increasing based on the 20-day moving average. So if I open up the 20-day moving average again, and let's look at this in a historical sense, what we're seeing here is the maximum over a longer period of time. What we're really talking about is the angle of inclination. In other words, how steep is this moving average? The steeper the moving average, the stronger the trend. And if I move this to, let's say, a shorter period of time, right, the last 3 days, again, that divergence, right, how far are we away from our moving average? The farther away from our moving average, in this case, the stronger we are seeing the price movement, or the stronger we're seeing that trend. Now, if I'm looking at for trading opportunities, and I'm looking at a longer time frame, and I see a nice strong angle of inclination for, let's say, a 200-day moving average, but I'm at the shorter term and I do see a weakening, doesn't mean the trend is going to change, just means the momentum has slowed. That might actually be an opportunity for waiting for us for a pullback or a drawback, where we'll wait for price to re-engage our much stronger or longer term trend. But if I'm a swing trader, I kind of want to stay with that momentum. So I kind of want to look for both a positive strengthening in a longer term and a positive strengthening in our short-term momentum. All right. So I just want to reinforce this thought before we move away. Here's our 200-day moving average. Again, maximum and strongest is said there. And again, on a historical basis, you can see that our 200-day moving average is, the angle is very, very high. It's strong. It's telling us that we have a very, very strong trend. But again, where is current price compared to our moving average? It has diverged, right? It has moved very far from our moving average. So that's the strongest signal we can get as terms of this particular trend. Okay, so we'll come back to this page in a second. But what I want to do now is, well, first of all, what I do like about this page is that it's this blend between long-term investing and our short-term momentum. So that's kind of what we're looking at here. All right, so what I want to do here is I want to go first to our stock screener. And so what I'm going to do here is, first of all, as a swing trader, there's one element we need to start to consider, and that is liquidity. So in other words, what I'm saying is that volume and our bid-ask, the spread between our bid and ask, is going to be important for us as swing traders. So I might lean towards trading large cap stocks over small cap stocks or over the counter stocks, because they'll be an advantage to me, right? Smaller caps will have less volume and the bids asks are a little bit wider. Large caps will have tighter spreads and a lot more volume action. And that will make it a lot easier for us to get in and out of fills. I might have a really good trade, but if I'm trading a small cap, there might not be somebody there who's willing to sell to me or willing to buy from me. But in large caps, you're going to get a lot more volume, and there's a lot more chance that you're going to get some of your fills. So first thing I'm going to do is I'm just going to eliminate some of these smaller stocks. Now, the NASDAQ, right? Are there large caps in NASDAQ? For sure, there is. Are NASDAQ stocks momentum stocks? For sure they are. But for demonstration purposes today, what I'm going to do is I'm going to eliminate the NASDAQ, and I'm just going to concentrate on New York Stock Exchange and the Amex or S&P type stocks, large cap stocks for this demonstration. All right, so at this point now, what I'm just going to do is do some simple screenings using our Barchart opinion, strength, and direction. So there's our Barchart opinion. And what do we talk about? Well, we want to look at our overall, right? That blend of long-term and short-term. And I'm just going to add this filter. So let's talk about this. I can also start thinking about, as a swing trader, in terms of starting to select candidates, I can think about the broader market. Now, for instance, in recent days, we have made probably a significant low, and it seems like the market is trying to gather momentum to the upside. So I could think about the broader market and then look for those individual stocks that are kind of being swept with the tide. Now, a week ago when the market was falling, I would have probably been looking more for swing opportunities on the sell side. But for today's, again, purposes, let's look at the buy side. So I'm just going to look for those have an overall buy signal. The other thing we talked about was, as a swing trader, we're looking at a little bit relative shorter time period. So let's look at our opinion for the direction. Remember, the last 3 days. And again, we're going to look at those that have stronger momentums. Now, I could look at those that have weaker momentums, looking for those pullbacks. That might be part of my trade plan. Maybe I'll only look for strong, longer-term trends and then looking for the short-term pullbacks. But again, for demonstration purposes, we're just going to concentrate on those that are strengthening or at the strongest level. And if I do that result, notice we get over 400. That's too many to filter through. So let's just add one simple filter. And one of the coolest filters that we can add in any technical analysis is volume. Because volume tells us about price. In other words, it confirms or verifies price. So what we're going to do is we're just going to look at each one of these candidates and we're going to say, hey, I want to see an increase in volume. That's kind of confirming to me that this momentum or this price movement is attracting new investment or new buyers, right? So we're not going to make a large hoop or hurdle for it. We'll just look for 20% over our 20-day moving average. And notice I just have 3 filters here, and I've narrowed this field down to about 30 potential candidates. Now, before I came on, I was looking at some of these, and there's a lot of them in here that we could go through. So just bear with me for a second here. The one that I did notice was this one, Neighbors. And what we're going to do on this is we're going to go over here to this plus sign. I'm going to open this up. And you can see my chart here. Just a little snapshot of my chart. And is this a stock that has nice momentum? Is it having a nice trend? Yeah, it certainly does look like that. What's our opinion? Our strength and our direction. Well, it says right here that our opinion is 100%. In other words, all those technical indicators are creating a buy signal. And it ranks in the top 1% of all short-term directions. The current trend strength of the market is strong. In other words, positive momentum. And long-term indicators are supporting the continuation of that trend. But what's the catch here? Right to the bottom. The market is approaching overbought territory, and we need to be careful of a potential trend reversal. Maybe not necessarily a trend reversal, but certainly a potential retracement of price action. So what I'm going to do now is I'm going to open up the full opinion again. And that was that page that I showed you before. And at this point now, what I'm going to do is I'm going to go back to my chart And I'm going to start thinking about, all right, so this stock is telling me that it has positive momentum. So what type of trade am I going to look for? Am I going to look for a breakout trade? I know, in other words, I'm going to look to see if we're taking out a current resistance, or we have gathered energy and starting to drive away. Or in this case, the Barchart opinion told us that prices might be a little bit overbought, and that maybe I might want to use a little patience and look to see for a drawback in price, where price can re-engage one of my trends. So what I'm going to do is I'm going to frame my trade based on where price is over multiple time frames. I'm going to look at supply and demand, or support and resistance, interchangeable terms, where I believe that there might be an opportunity to buy on support, or also I need to understand where is the resistance in terms of setting some of my targets. So typically what we'll do on that is we'll just look at recent highs and lows, pivot highs, swing highs, pivot lows, swing lows. Now, what is a swing high or a swing low? Well, we can talk about where price changes direction from going up to going down, or price going down to going up. But really what I'm talking about is recent lows, either a daily low, a weekly low, or a monthly low as a significant swing low, or a recent high, a daily high, weekly high, or monthly high. But if you're not sure of yourself, or you not understand this concept that I was just talking about, one of the cool features that Barchart does for us, it does give us support and resistance right here. So let's look at what's going on today. So right now we can see our last price is 34.57, right? And our first resistance here is around 34.87. Now I'm going to go to the chart and look and see that we probably already tested this level. So this level would probably be invalid for today. It's already been tested. So we might not want to look at the next resistance, and the next resistance is at 137.51. So let's just round this off so I can remember it, 137.50. Where would there be some potential support? Well, in this case, our first support level is at 127.60. All right, so 137.50, 127.60. That is our support and resistance. So let's go back to our chart. And just to make this a little bit more viewable for us, I'm going to just move that to the side. And I'm going to come over here in my drawing tools, and I'm going to draw that support at 127.60. Now, I'm sliding this around and trying to find that precisely. Don't worry about that. Just drop the line and then right click on the line and come in here and write 127.60. Now, before you apply this, here's a little trick. Clone it. So there's our 127. 127.60. And then I have this second line here that I clone. I'm going to right click on that, and I'm just going to come back in here and do 137.50. And so now what I can see is I've kind of framed where is price now and where are these potential entries and exits. So you can see that we're kind of high in this range of price. So at this point here, we're going to start our multiple time frame analysis. So what I'm going to do is, this chart is on a daily level, 6-month information daily level. That's what it says here. Let's take a step back and look at the bigger picture. So here we are getting close, right? That 137.50 is right on an area where you can see there's a lot of potential resistance. So we're kind of banging up against that. Again, that's what the opinion indicator was saying to us, that we could be a little bit overbought. But also we can see that our potential buy entry, is right where price is starting to break out. So that might be a good area for us to think about in terms of an entry. Now, here's our weekly candle for today. We talked about looking to set expectations in terms of potential highs and lows. And you can see that our most recent low, if I look over to the left up here, our most recent low on this weekly candle was 121.33. So that is pretty far down from where we currently are. If I go to a daily level and I look at this particular candle right here that broke away, what happened to my line disappeared? Oh, we'll just throw out a new one.
No, John, I think you moved it up.
Oh, I did I by accident?
Yeah, go back to your longer term chart. Yeah.
I didn't even notice that. Thanks, Gene.
Yeah, you moved it up. I caught that one.
Oh, good job. Good job. Let's reset it. $127.60. Okay. All right. So at this point now, here we can see this is this explosive candle that is now starting this new momentum movement up. And if we are a little bit overbought, maybe this might be a good opportunity for me to wait for a retracement and to buy into that. So now all I have to do is think about, where am I going to set my risk in terms of, I have an entry now and I want to make sure that I don't want to risk too much, right? I don't want to give back too much to the market. And where could I set that up? So for instance, yesterday's daily low was around 125. It looks like 125.60. 125.60. So if I entered at 127.60 and I risked 125.60, I'm risking about $2. If I'm risking $2 and I'm looking at this potential target, this resistance at 137.50, in this case, it looks like I'm risking $2 to make close to $10. Is that a good trade? Well, yeah, it sounds like a good trade, but if I'm not sure, one of the cool things that I can do is over here in our tools, we have something called our risk reward page tool. And so let's put in the numbers and let's just see what happens. 127.60. We said that we would risk this green candle, it's low, 125.60. And our target now is 137.50. And if I look at this trade, you can see that it does the calculations for me. So I'm risking $2 to make $9.90, or a risk-reward ratio of close to 5-to-1. That is definitely something I'd be interested in doing. Now, as far as swing trading is concerned, when we start looking at this risk-reward ratio, what we want to do is we want to make sure that we get enough reward for the risk that we're going to take. Now, some day traders might do 1-to-1s or 2-to-1s, but we're not in that game. Swing traders, we want to make sure that we get at least 3-to-1. I think that is a good reference point for us. And anything greater than 3-to-1 is a much better trade. But then we have to start thinking about some other things in terms of, if I set a target where I'm getting 5-to-1 or 6-to-1 or 10-to-1, that might not be a realistic target for a swing type trade. So what can I do to help me analyze that? Well, first of all, let's add this back to our screen so we can reference it. And one of the things we can do is, I'm going to go into our technical analysis. And if you don't know where that is, it is over here, technical analysis. And inside the technical analysis, we have another tool that can help us kind of gauge these swing trades, and that is something called our average true range. Now, what is the average true range? Well, it's a measurement of volatility. It's also a tool, a measuring tool for us. It tells us the potential range for this particular stock on any given day. Now, this is not a directional tool. It's just telling us that the range from high to low will be around, in this case, about $7.50. Doesn't mean it's going to move $7.50 in one direction. It just means that the range between high and low is $7.50. So let's think about this trade that we just set up. Well, we're risking $2 of a range in this particular stock of $7.50. That's good. That means we're only risking about, what, a quarter of that range. So again, general rule is when I set one of these swing trades up, I really don't want to risk more than 50% of my ATR. The second part of the equation would be my target. In this case, we set a target of around $9.90. And if I look at my ATR, it's around $7.50. Again, I really want to kind of be close to maybe 1.5 or 2.5 times my ATR. If I start setting a target that my target is 4 times my ATR, or 5 times my ATR, that might not be a realistic target for a particular swing trade. Now, how can I determine that? Well, up here in our technical analysis, you can see that in the last 5 days, this particular stock, its momentum, it's moved almost $13. What's that? That's about 2 1/4, 2.20 cents over each day. So a range of $7.50, but a directional movement of about $2.20. So our target was $9 away. So that's kind of telling us that in the likelihood that this trade, if I'm correct, will be fulfilled within the next 5 days. Or in other words, within 1 week's time. That is how I can determine if my target is too far away. If I had set this trade up where the target was $20 away, well, that wouldn't make sense, right? That'd be over 2 weeks of price movements for me to get that potential trade, or in this case, looks like 20 days. So one of the cool things you can do here is look at your ATR. We're not going to risk more than half of our ATR. And when I start setting my targets, I want to be somewhere in that 1.5 to 3 times my ATR to make this a realistic trade and a trade where I can catch that momentum over a very shorter period of time. Okay, so let's do this. Go back to my screener. All right. So this is kind of how we can look at that screen. I'm going to just show you those filters again. Very simple screening. But let's say you have a set of stocks that you've already been watching, or the ones that you're familiar with, some of them that you trade on a regular basis. One of the other things that features that we have, let's say, for instance, here's a watch list that I created. This is our 22 stocks for 22. We did this webinar back in January. And these are just 22 stocks that I put on this watch list, and I'm looking for trading opportunities. So I don't need to do the screener if I have stocks that I'm familiar with. And so any of the watch lists that we have, one of the features that we do give you is multiple views: main view, performance, charts, fundamental views. But we're going to just go to the technical view. Now notice on the technical view, we have our opinion. That's that opinion indicator that we saw in the upper right-hand corner of our individual stock. And you can see that of these stocks here, all of these ones have 100% indicator. In other words, all those indicators have a buy signal. That's telling me they all have strong positive momentum. So then what I can do here is I can go into each one of them. Again, my first process is going to be, am I going to look for a breakout trade, or am I going to look for a pullback trade like we just did with our neighbor? So here's Mosaic like we did before. I promised you we'd be back to that. Again, let's go through that process. So what is my opinion? Top 1%, trending really strong, right? A lot of positive momentum. Caveat, maybe overbought, right? So maybe I'm going to look for a pullback to re-engage my very strong trends. What's my technical analysis? In other words, what is my ATR? Well, we can see here our ATR, 20-day moving average ATR is 2.31 or $2.31. So now my brain should be thinking, okay, I have an ATR around $2.30. I don't want to risk more than maybe $1.15. If I'm going to set a target, right, I want to set a target somewhere between maybe, let's say, $3 and $4. So let's go back to our chart. We'll open our chart up. Actually, I made a mistake. Let's do this. Let's go back to our bar chart opinion. What's our support and resistance? Our support level is at 50.40, and current price, you can see, has already taken out the first resistance level. So we're going to set a second resistance level, 55.64. And I took the liberty of setting this up. And again, we're going to start at that higher time frame, in this case, a weekly chart. And where is current price? Well, we can see we're kind of in the high end of that range. Again, telling us maybe the market is a little bit overbought. Also, maybe I want to take a little time and look at, is there some roadblocks, right? And maybe why price could pull back. And you can see that in the purple there on the left-hand side, there are two areas of resistance that we're kind of currently bumping up against. Again, maybe a little overbought, looking for a buying opportunity. So again, here is our daily chart. And now I'm looking at, okay, yeah, I'm going to wait for this little pullback. I'm going to look for price to re-engage my uptrend. Where do I see price being accumulated? Where do I see volume being accumulated? Right? In this candle right there, right? These candles right here. So now I'm going to go down to a lower time frame to help me to define my risk. So now I'm at a monthly chart on an hourly time frame. And there's that nice big movement of volume as traders are accumulating positions. There's probably still some buyers still down there. And my 50.40 is going to be my entry. And now what am I going to risk? Well, maybe I'll just risk these two candles here. And why these two candles? Well, look at the time of day that these two candles were created. One was created at 9 a.m., one was created at 10 a.m. In other words, the first couple hours when the stock market opened. I'm a big fan of finding areas of entries and exits based on the openings and closings of our markets. And so this would be a good area for me to start thinking about looking for a potential entry into this market where I'm going to re-engage this trend. And this is also an area where previous traders were accumulating position. There's probably still somebody there who wants to buy as well. So what is the low, daily low of these two candles? Well, it's right here around, right there it says up in the left-hand corner, 49.10. So let's use our tool. All right, so we're going to enter at 50, 40. We're going to risk 49.10, and our target is 55.64. What's our risk-reward ratio? 4-to-1. Does that work? Yes. How much am I risking? 130. What is my reward? $5.24. Revisit our technical analysis. What's my average true range? $2.78, $2.50. I'm only risking half of my ATR. What's my target? $5.50, 2 times my ATR. How much has this stock moved over the last 5 days? The momentum of this stock has moved $8.66, or about what? Looks like about $1.50, $1.60. And if I have a $5 target or $5.50 target, is this target in reality, in range in the next 5 days? Yeah, I think so, right? Very doable trade if I get that entry. Understanding the relationship of ATR, price movement, and our risk-reward ratio is one of the key components to swing trading. Okay, where are we at time? Okay, we're doing really good here. All right, let's see if we have time for, well, let's do this first. Let's answer some of your questions. See a lot of questions piling up. Any particular questions that are kind of general, Gene?
A lot of people are asking if there's a recording available for this. And yes, you're going to get an email later on this afternoon with the link to the recording. Toward the end of the session, we're going to show you where you can find our webinar archives. It's an easy place for you to go and find all of our webinars. John will show that too later.
Cool. Let's see. I'm just reading a couple of your questions here. So Joel asked good questions. How do I determine that a support and a resistance level is no longer valid? So Joel, it's really easy. Once price moves through it, it's no longer valid, okay? But there are some times that where price will go through an area of resistance or support and then fall back out. And that, again, it's not an absolute number. It's kind of just an area, right? So again, when I'm doing this process and I'm using the bar chart support and resistance levels, it's just kind of put me in the right neighborhood. I still need to do my risk assessments. I still need to look at my candles. I still need to look at those weekly highs and lows or daily highs and lows. And I might determine that I might find a support that's a little bit lower, or I might find a support that's a little bit higher. It's just kind of helping us to look in a very particular area. That's more important than the actual number. So Brian asked something about using options chains in terms of the expected move of ATR, and certainly, Brian, if you understand how volatility works and those calculations, yeah, it's basically the same thing. But in this case, we're kind of trying to keep it simple and using that measuring tool of ATR, which is a measuring stick of volatility. So Jason asks, can we use Trend Spotter to help us for leading indicators? Yeah, that's, again, one of the indicators that are in our 13 indicators, right? And so that one's actually kind of a blend of a blend as well. So yeah, you can use that one. Dan says, do one more example. So Dan, yeah, I'm going to do one more. I'm going to do Alcoa. And then JP asks, are you able to apply similar processes to options trading? Great question, JP. So let's look at, let's say maybe I'm not going to actually trade the physical stock or the futures market. Maybe I'm looking at an ETF. Yeah, you can start waiting for a price to come into those areas where you think is support or a buy, and then buy the calls or sell the puts, right? Or if you are looking at a breakout, right? You're looking at a credit spread where you're doing a vertical spreads, using that timing, that swing trading timing, using the options. Yeah, that is definitely a lot of swing traders do that. They do use options. But I was kind of trying to keep it to just the actual stocks themselves. David says, can we use this for futures? Yeah, David, the technique is still the same. Multiple time frame analysis, big picture, trend picture, lower time frame to lower our risk. Looking at the range of our price movement, our ATRs, and setting our targets based on a multiple of those, and where we're not risking a large portion of that. Patty asks, so you've been using the weekly 3-year, is longer recommended for swing trading window. So every swing trader is a little bit different, Patty. So I know some swing traders that look at monthlies, weeklies, and dailies. Their time frame analysis, right? They tend to take on a little bit more risk, because if you think about it, if they're using weekly as their risk assessment, their trend assessment, then they're going to have much larger a risk exposure. But then the question becomes, if I'm setting up a trade based on weekly price movements, then what type of swing trader am I? I'm a multiple week swing trader. So, I think, somewhere between maybe a high end weekly and a low end, maybe 30 minutes or 15 minutes, somewhere in there. I know a lot of swing traders who do, let's say, daily 4 hours, 1 hour, or daily hour, 15 minutes. There's kind of a rule of thumb that you can use, Patty, and that rule of thumb is, as you go from a higher to a lower time frame, you want to kind of go by what is called a 4-factor, right? At least 4 factors. So, for instance, if I'm doing a weekly as my higher time frame, then my next variable time frame down would be a daily. So 5 days in a week, a 5-factor. If my market has, let's say, like the stock market has 6.5 active trading hours, then from a daily, I might go down to an hourly, right? A factor of 6.5. Or if I'm at a daily level and I'm using, let's say, a market that trades like a futures market that trades 24 hours a day or 23 hours a day, and I go from daily to a trend time frame, let's say a 4-hour time frame, and then what would be my next factor? Well, from 4 hours to 1 hour. So, Patty, you can use whatever time frames you want, but as you do this fractal time frame factorization, kind of stay in that 4 to 6 factor. That'll help you in determining those values. So, Zach, as I have some trouble knowing when to sell, any tips in selling? So, Zach, we do have a webinar called exit strategies, I think, or a well-planned exit strategy. I'll show you that in the archives a little bit. But again, as each trader develops different trading plans, you could use a technical trailing stop. But again, as a swing trader, that's kind of why we want to look for these much more realistic targets, where I don't need to get, 5 to 1, 10 to 1, right? That's not our game. We're just here to hit a lot of singles. Hit and run, hit and run, hit and run, right? How many guys in the Hall of Fame, Baseball Hall of Fame, were consistent single hitters, right? How many of them in the Hall of Fame were home run hitters? There's probably a lot more consistent single hitters in the Hall of Fame than there are home run hitters, okay? All right, so a lot of great questions. Let me just move on here because I'm running out of time. All right, so here's Alcoa. Let's go through it one more time. And let's start from our opinion. And those of you who follow our sessions, Alcoa disclosure is one of the stocks that is in my portfolio, although I just was telling Gene that I just sold out, and I'm kind of disappointed I'm not in this anymore. But it is one of the stocks that I will follow on a regular basis. And what are we at, right? Top 1%, super large momentum. Probably, maybe potentially what? Yeah, I heard it out there. Yeah, maybe potentially overbought. All right, so I'm going to go to my support and resistance, and I think was Patrick is asking, how do you determine if a support and resistance has been used up? Right, so we're kind of right here at 82.24. Notice our support is super far away here. It's around $75, $76, about $6 away. Our first resistance is around $84.65. Right, so I'm probably thinking maybe more of a retracement or a drawback on this one. What is my technical analysis? Right, so this particular Alcoa moves about $5 a day. It's moved about $1.25 over a period of 5 days, $6. So I probably don't want to risk more than about $2.50. And I probably want to look at a target somewhere between, let's say, $5 and $7. Here's our chart. Again, I'm going to make this a little bit more readable for us. All right, again, on our weekly, right, we've really kind of shot away, right? We've deviated pretty far from our price action, super high. Now, we don't have any resistance here besides what the pivot numbers that we just generated for us. So there's really no target for us in terms of major resistance. Alcoa is making all-time highs. Let's go to our trade. In this case, those prices already blown through me. So I'm going to look for, here's a trade, this is a hypothetical trade that we would have set up. Here is a breakout, nice explosive candle, right? There's that big candle on a weekly basis, right? There's that same big candle. Where am I going to risk? We're going to find my risk, right? Below that big candle. Price shot away, came back, re-entered into my potential zone. In this case, 70.54. Looks like we're risking about 68.82, about 270, half of our ATR. And we set a $4 or $5 target. Now for today, what could we think about? Well, again, maybe I'm going to wait for a little bit of a retracement. Again, if I go to my higher time frame, what's going on this week? I'm going to look for an entry somewhere inside of this candle. I'm going to risk the bottom of this candle. So in this case, I can work backwards here. So in the bottom of my weekly candle for this week is around $75. So that means if I'm going to risk half my ATR, I'm going to look for an entry around $72.50. And if I'm going to look for I'm going to risk $2.50. I want to get at least $7, right? $7.50. So let's break this down. All right, so let me get rid of this current trade. So we said $75. There's that candle. It's our risk. I'm going to look for an entry around $77.50. Notice that it's that candle right there. And what is my target? Well, it's going to be $7 above that. And that puts us around $85, where price has just recently retreated from. Get up my risk reward tool. $85. Excuse me, that's not my entry. My entry is $77.25. Risking $75. Setting a target of $85. Risking $2.25. Trying to make $7.75. I'm getting a 3.4 risk reward ratio. Technical analysis. I'm risking half the ATR, and I have a target of what? 1.5 ATRs. So does this trade work as a swing trade? Yeah, it does. Okay. So that was an extra example for you, Dan. I think Dan was the one that asked about that question. Okay. All right, so I'm running out of time, so let's kind of sum this all up. All right, swing trading, what are we trying to do? We're going to identify our entries and exits based on our intra-month, our intra-week highs and lows. Again, those support and resistance levels, depending on the length of time that we're going to hold that trade. Again, swing traders, we're going to hold trades for a little bit longer, a little bit shorter period times. Swing traders also rely on pattern recognition, right? Now, I didn't go into that in detail today. We do have some webinars where we talk about patterns that traders need to know, and also key reversal candles, engulfing candles. I showed you a couple of engulfing candle examples. Again, we have a 3-part series on candlesticks alone, where we go into a lot of detail about how to identify some of those candlestick patterns. Moving averages, momentum oscillators, and ATR are bread and butter tools in terms of finding the right candidates, and that's what our strength and direction box is helping us. Our strength and direction page is going to help us find those candidates that are already filtering out those that have strong momentum. And our ATR is going to help us assess our risk in terms of how much risk I'm going to take, and also help us set those realistic targets. And again, I can't convey this enough. Since our goal as a swing trader is to capture a small portion of a significant price movement, the importance of risk reward, right? I don't want to start looking for very small risk rewards. That's not a game that I want to get into. 1-to-1s and 2-to-1s is not the game you want to do it. Leave that to the day traders. Swing traders, let's look at 3-to-1s or better. If you get something that's 2.5, 2.7, and you're happy with that, that's fine. But let's kind of use that 3-to-1 as our threshold. But also make sure that your risk reward ratios aren't too large, or that your target's too far away, because then that does not become a realistic trade. Then you're really kind of being more of a long-term investor. So what was that process that we just went through? Multiple time frame selection. What am I going to use? Weekly, daily, hour, daily, hours, minutes. The higher time frame is going to frame what type of trade I'm going to look for, a breakout or a retracement or a drawback. The middle time frame is the trend I'm going to rely on, and the lower time frame is how I'm going to refine my risk. I'm going to decide on what type of trade initiation, breakouts, retracements. I didn't find a good breakout example today. I apologize for that. And setting our stop loss. Now we're in our lower time frame. We're going to look at those significant daily lows, weekly lows, monthly lows. Where do I determine that my momentum has changed and my trend has changed against me? Where do I want to get out? one of the easy rules that we can use is half of our ATR. I'm going to choose a realistic target. How do I choose a realistic target? Well, I can just look at supply and demand, support or resistance, look at those pivots that are weekly highs, daily highs to set those targets, or I could just do a value based on a multiple of my ATR. And then finally, again, I want to convey this, make sure that you have a good risk-reward ratio. Most of the trades that I do in swing trades are going to fall in that 2.7 to about 4.5. Those are the trades are the sweet spots. Those are the ones that I ring a lot of registers on. When I get greedy, when I start shooting for those 5 and 6 to 1s, unless I can see a clear path of nothing in between me and my target, those are the ones that usually price comes back and stops me out. All right, so I hope you guys enjoyed today's session. I hope you guys learned some things. So I know Gene is going to ask me this. First of all, Gene, I did want to ask you something. In terms of the watch lists, those filters that we have, watch list, the views that we have, that is something that is available to both the regular subscriber and the premium subscriber. Is that correct?
Are you talking custom views, John?
Yes, the views, yes. Can you explain the difference for me?
Well, if you just register for a free membership, you get to build 5 different custom views that you can use anywhere on the site. And we've got hundreds of data fields that you can add to a custom view. If you're a premier member, you get unlimited views. So you can really pull all the data that Barchart offers onto any page on the site and view whatever you want that way, including things like RSIs and the opinions and the strength and direction.
So, so just want to kind of show you that what Gene was talking about. So, like these views are the ones that are default views, right, Gene?
Right. Those are default views that are available for anybody viewing the page. Although I think, let's see, the mini chart view, I believe, is a premier membership option. But custom views, yes, as a free member, you can build up to 5 different custom views, and a premier member, you have unlimited views.
Yeah, I have a few.
Just a few.
Just a few. Okay, so we're running out of time here. So next week, our upcoming webinar next week, we're going to look at, actually, I forget what is next week. Oh, yeah, top stock 100 to buy. So what we have is in our trading ideas under stocks, we do have something called top 100 stocks. So what we're going to do is we're going to look at that list. We're going to see how that list is compiled, and we're going to look at it from a technical standpoint and a fundamental standpoint and see if we can't narrow down some of these top 100s to maybe just a handful that might be some trading opportunities. All right. What else did I forget, Gene?
Well, one other thing that we do want to point out, Barchart does have a YouTube page with all of John's videos, all of his webinars. John also posts every now and then little educational sessions that you might find really helpful. And if you subscribe to YouTube, John shows you the button right there on the page. You will get alerted whenever there's a new video posted. Today's session, we're on the archived webinars tab. You'll find today's session there in a couple hours after we get the recording processed. It'll also be up on YouTube as well.
So just to also emphasize what I didn't mention before, here's our candlestick theories. Somebody was asking me about trading ideas in terms of, well, I think it was risk management. Let's see, portfolio management. I apologize, I don't exactly know where this is. Nope, that's not it. Anyhow, there isn't one in there. You got to kind of dig around.
Yeah, if anybody is looking for a specific webinar, please email support@barchart.com, and we'll be happy to find those for you. Also, back to the YouTube channel. if you like what you see, give John a thumbs up on YouTube. We appreciate it.
Yeah, I would appreciate that. All right, so until next week, everybody be safe out there, the best of health, and the good of all trading.